Hello and thank you for joining us on Business Morning. I am Bisi Adebayo. Oil prices are still trending lower today amid concerns that a possible rise in COVID-19 cases following the U.S. Labor Day long weekend, which also marks the end of the peak U.S. driving season, could squeeze demand for fuel. Brent crude futures eased nearly 0.2% to $41.93 a barrel, while U.S. WTI crude futures were down 1.9% at $39.01 a barrel. Now, coronavirus cases rose in 22 of the 50 U.S. states on the holiday weekend, traditionally filled with gatherings to mark the end of the summer. At the same time, cases are flaring up in India and in Britain. Also weighing on the market is the upcoming maintenance seasons for the U.S. refineries, which could cut crude demand by 1.5 million to 2 million barrels per day. And back home, the Central Bank of Nigeria resumed its bi-weekly sale of foreign exchange to 5,180 licensed bureau de change operators across the country yesterday, with a total of $51.8 million to meet the demand by legitimate end users. Now, last week, the CBN injected a total of $50 million to the investors and exporters window, a move that positively lifted the local currency. Now, that resumption of forex sales to the BDCs is part of the CBN's efforts to enhance access to hard currencies following the resumption of international flights over the weekend. The Naira closed flat against the dollar on Monday at the investors and exporters window of the foreign exchange of foreign currencies market at 386, but we saw it weaken by 1.1% to 445 at the parallel segment. And talking about the resumption of international flights, now, of course, flight operations resumed in Nigeria over the weekend as earlier scheduled by the federal government, with 14 international airlines allowed to operate and 8 others disallowed from entry due to restrictions on Nigeria from the counterpart countries. But some of the COVID-19 protocols that have been put in place for the smooth running of international flights include pre-departure and post-arrival coronavirus test results of travelers, registration on travelers' tracking portal, as well as thermal screening at the airports. Airlines are only allowed to airlift maximum of 200 passengers per flight, despite an average capacity of 300 travelers, as airlines that transport travelers without COVID-19 negative test results face a $3,500 fine and other sanctions. The Director General of the Nigerian Civil Aviation Authority, Captain Musa, who joins us now to speak to the level of compliance with these rules and other related developments. Good morning, Captain. Thank you for joining us on the program. So tell us, what has changed since Saturday when international flight activities resumed in the country? How has it been?
Good morning. Thank you for having me on this program this morning. Since the international flights started, little or no hitches along the way. It's been good so far, so good. Although it's not all the approved airlines that have resumed operations, some will resume a couple of days down the road. So we're good to go for now. Nothing much happening. It's been smooth sailing.
Well, what about the compliance with COVID-19 protocols? What do they look like on the part of travelers and the airlines?
Most of them have complied. They had a few hitches here and there that people did not comply with, but it's not their fault. Some people did their tests earlier on before they came, and unfortunately, because the validity of the test is now 96 hours, it expired, so they had to do a retest. But nothing significant. I'll say compliance has largely been complied, has been met with.
Now, there's approval for some 14 airlines to operate across Lagos and Abuja airports, while restrictions are placed on 8 others and the nationals of those countries. Has there been further changes since flight operations commenced on Saturday?
Okay, airlines that have put restrictions on Nigeria put restrictions on. That's a policy, government policy decision that was taken at the presidential task force level, and it's the only body that can review that policy. But probably there'll be some discussions with the embassies and how things go. Then the presidential task force will come out with a position on that. And also at this point, I'd like to make it clear, some of the airlines that were not allowed to operate in Nigeria had nothing to do with the issue of restrictions in Nigeria. They just needed to comply with the regulations of the Nigerian Civil Aviation Authority for foreign airlines operating into Nigeria. Some have already done that. So hopefully in the next couple of days, when they are ready to start, they'll be approved to resume operations into Nigeria.
Now, Captain, tell us, are there ongoing talks with those countries to resume the functionality of the BASA agreements?
Not that I'm aware of at this moment.
Okay, so travelers, one other issue is the fact that travelers have complained about the high cost of airline tickets. Is there any measure that has been put in place to address this? Of course, the airlines will say that they want to make their profits. Of course, they're only allowed to carry 200 passengers, and some of them have the capacity to carry at least 300 passengers. But is there any measure that has been put in place to address this issue?
It's a bit of difficult. The air tickets commercial issues with the airlines, and the restriction to 200 passengers is to have to be able to control the amount of people that fly into Nigeria on a daily basis, because we have been given a limit of 1,280 passengers daily for Lagos, and the same for Abuja Airport. So if we don't restrict the number of passengers each airline carries and the number of flights that come into either airport daily basis, will not be able to control, still within the limits of the number of daily passengers given to us by the PTF.
But how long are we going to see these numbers? Is there possibly going to be a rise in these numbers in the coming days?
I believe very shortly the numbers will increase. And these numbers are strictly limited by the testing capabilities of approved clinics to do the COVID test, the 7-day COVID test on arrival. That is the limitation. But I believe as more clinics are certified by the relevant authorities, this number will increase. I'm sure probably within the next 1 week or thereabout, we'll see a gradual increase in the number of passengers being allowed into Nigeria. Subsequently, airlines will get more frequency and or be allowed to carry more passengers per flight.
Now, for some of the aircrafts that have been grounded since the lockdown and now that they have resumed flight operations, how do you ascertain the safety of the flights for the airlifting of passengers?
Well, each country has its own civil aviation authority, and it's their responsibility to ensure all the flights, all the aircrafts under their own registration, or all the airlines with the relevant air operating certificate of the country. It's their duty to ensure that all the aircrafts and flights are airworthy and the pilots are positioned to fly safely, like we did in Nigeria. So it's the responsibility of its civil aviation authority. We'll have the international standards and recommended practices as mandated by International Civil Aviation Organization, and all countries are expected to comply with that.
Now, for local airlines such as Air Peace that fly international routes, now, what's the state of their operations?
Well, whenever Air Peace is ready to resume operations, we'll give them the approval. I've spoken to them, and they need a few days before they resume international operations, and they'll be taken care of.
All right, Captain, now, only Lagos and Abuja international airports have been reopened for now. Any news about the reopening of other international airports?
Yeah, there are certain logistics being put on ground, certain infrastructure to be put in the airports, namely Kano, Port Harcourt, and Enugu. And also they need to have some clinics within those cities that are certified to carry the COVID-19 tests. Once that is done, hopefully in the next couple of weeks, operations will gradually start at those 3 other international airports.
And how many passengers daily are we looking at these airports?
I cannot say for now. And I think it also depends on the number of certified clinics, the capacity of number of certified clinics to carry out COVID-19 tests in those cities. Hopefully we'll have enough clinics that have been certified by relevant authorities to have a high number of passengers allowed to fly into those cities.
Oh, how about the issue of timing now? How long does it take? I mean, when an incoming flight comes in, how long does it take with the COVID-19 protocols? How long do the passengers have to be at the airports when they return and even when they're leaving the country?
It's not much. That's why we have the online platform where you fill all the relevant travel information, all the information that been needed by the health authorities, so that when you arrive in Nigeria, that's minimum delay. Once the passenger arrives, you just go through the Pulse Health Services. They take your temperature and check you for any other COVID symptoms, such as high temperature, cold, sneezing, anything. Then you just go through. If you are cleared, you just go through the normal arrival procedures through the customs, immigration, other security agencies, such as custom and others. Not much of addition of a delay. It's not much.
What about the issue of lodging and accommodation of the international flight crews? How is that being handled locally for safety?
Well, it's not a local issue. It's an international standards. Crews are allowed to lay over for up to 48 hours, but they'll be restricted to their hotels, expected to stay in their hotel rooms for that period. And that's international standard. It's not a local thing. That's the global international standards, and that's what we assist the airlines complying with. And so far, so good. Quite a majority of the airlines come and turn back. Just a few that do overnight stay for 24 hours and they leave the following day. So not much of a problem.
For domestic airlines operations now, would there be any updates that travelers would like to know about?
And the domestic, nothing much. So far, so good. It's been a pleasant surprise. The level of compliance of the health protocols put in place for the domestic airlines. Nothing much for now. Nothing to update. It's been a good, pleasant experience.
Okay, now what about commercial flights which have actually kicked off operations to the Akanu Ibiam airport at Enugu after the runway was refurbished? Are there further developments that the public need to be aware of?
Well, the airport was closed because of the runway. The runway has been fixed and there's been continuous upgrade of the facilities. The runway lights have been fixed, beautiful if you see the pictures, and upgraded navigation facilities. And also the terminal is undergoing a significant renovation. So it's all good news coming from Akanu Airport, thanks to the effort of the Honorable Minister of Aviation to renovate all the international airports to meet all the international standards.
Now, yeah, we know that the COVID-19, the number of COVID-19 cases, yes, it appears to be flattening, but then, of course, this does not mean that the end is here already. Do you think that we will get back to shutting down the airspace again if the number of cases continue to rise?
Well, that will be my worst nightmare. I don't hope we get back to the point of shutting down the airports, but the health authorities are monitoring the situation, not only the air transport, any system in Nigeria that is responsible for significant spike in the number of COVID cases. I believe the responsible government will take all the necessary action to deal with that situation.
Now, we have a partial reopening now at the airport, but at what point do you think that we'll get into full resumption of activities?
Well, I can only project, hopefully in a couple of months, airports will resume to normal operations. But don't forget, the forecast for international air transport, it's not going to get back to pre-COVID-19 levels till at the earliest, at the end of 2021. So even if we open fully, the traffic level is going to be much lower than the pre-COVID levels. So it's going to take another 12 to 18 months for the traffic to start recovering to that level.
Now, let's talk about the infrastructure now. How is the Ncaa responding to other infrastructure gaps at the domestic airports?
Well, we are working closely with the Federal Airports Authority, which is the statutory body responsible for they own and manage around those airports. And we've had significant improvement in some of the basic requirements of those airports. After the airports were closed down due to the COVID-19, before the opening of the airports, we worked together, and there are a lot of required infrastructure they had to upgrade and put in place before the airports were approved by Civil Aviation Authority to resume operations.
All right, Captain, would like you to tell us now, do we have any update on the resuscitation of the Nigerian Airways?
Well, I don't know about Nigerian Airways. I know the government is working on having a new national carrier, and that is being handled at the level of the Ministry of Aviation. We are regulators. We work with the airlines to ensure they comply with all our excellent regulations, and any new airline coming into place will have requirements for them to meet. Even the national airline will have to meet with those requirements. So once they are ready, they come to us. We'll work with them to ensure that all due processes are complied with.
So what are your projections for the international flight operations in the coming days, apart from the COVID-19 pandemic?
Well, I think we will see more airlines within the next 1 week. A lot more airlines will start operating into Nigeria. I think so far, as of yesterday, we've only had British Airways, Middle East Airlines, and Emirates and Ethiopian. But over the next couple of days, we'll see an increase in the number of approved airlines operating into Nigeria. And hopefully, within the next few weeks, within a short period of time, we'll be able to increase the number of authorized passengers that will be allowed to fly into Nigeria.
I would like to thank you, Director General of the Nigerian Civil Aviation Authority, Captain Musa Nuhu. Thank you for speaking with us on Business Morning.
Thank you very much, and do have a great day.
All right, let's just do a quick recap of the crude oil market. Of course, prices are still down today, and that's coming amid concerns that a possible rise in COVID-19 cases following the U.S. Labor Day long weekend, which also marks the end of the peak U.S. driving season, could squeeze demand for fuel. Of course, as at this morning, we saw Brent crude futures easing nearly 0.2%. at $41.93 a barrel, and U.S. WTI crude futures were also down 1.9% at $39.01 a barrel. Coronavirus cases rose in 22 of the 50 U.S. states on the holiday weekend, which is traditionally filled with gatherings to mark the end of the summer. And at the same time, cases are flaring up in India and in Britain, and also weighing on the market is the upcoming maintenance seasons for U.S. refineries, which could cut crude demand by 1.5 million to 2 million barrels per day. Our commodities market update will be up next when we return in just a moment. Please stay with us. Welcome back. Now, time to discuss today's burning economic issues at the domestic commodities market with the research analyst at the financial derivatives company, Temitope Olubile. Good morning, Temitope. Thanks for coming on.
Good morning, Bisi. Thank you for having me.
Let's begin our conversation with oil prices. Of course, they're down to about $41 per barrel this morning. Tell us what's dragging down the prices at the market.
Okay, so, last week we were, a bit hopeful. It was climbing to 45, above 45. But now we're back down to $41 per barrel. And we see that, the first sign, it's a demand recovery concern basically driving it. And then when you see the leader, Saudi Arabia, cut its October selling prices to, countries such as Asia, that shows that even Saudi Arabia that price move shows that, they are becoming a bit wary of, the demand recovery curve. And we see that, as countries such as the US, one of the biggest users, approach the the colder months, the driving season is off, and so that aspect of demand really goes off, and now the new hot commodity will be natural gas, for heating purposes. So that's really what is driving oil prices down.
And that's in addition to the rising cases in COVID-19.
Of COVID in some countries, the US, India, Britain, we see that the cases keep climbing. They are yet to flatten the curve. So that is what is driving oil prices down right now.
What about international flights now, which resumed back home here at the weekend? Of course, it has led to a jump in the demand for Forex. How's that coming up, especially after the CBN resumed the sale of Forex to BDCs yesterday?
Of course, so, the main concern, the main economic concern for resumption of international flights was the Forex impact. And, the analysts were right in terms of the direction the Forex will go. Yesterday, we saw that, the CBN resumed sales to the BDCs, but the sales were what we'll call not enough, inadequate, right? So you see that, about $51 million, was sold across over 5,000 BDC centers, and that was, coming down to what? Maybe 10,000 per BDC center, and that was basically not enough, right? So we see that for travelers, we're now going back to the parallel market, and of course there will be the premium. There will be, the increased pressure at the parallel market was what led to Naira crashing to 445 Naira for $1 yesterday, and we can expect more pressure on that side of the market, on the parallel market side, even though, the INE window seems to be doing okay right now, but the parallel market will remain, there will be increased pressure as, we go further.
So where do you see the currency trading at with the pressure?
I mean, the pressure, I think, should increase or should force an increased sale to the BDCs. As long as there's a supply, as long as the supply is able to meet the demand will still be there. But the problem now is that the fact that the supply is not matching the demand. So, but with oil prices trading down, we have that, supply concern, right? So, but going forward, if the supply can match the demand, we expect oil prices, Forex to remain stable. But looking at it, the Forex could come under more pressure, and we could see it trading maybe 450 to 470 Naira per dollar.
I'm sure that's not what many people would like to hear, considering the fact that a lot of us, or a lot of people were actually anticipating that when the CBN resumes sales to the BDCs, it will actually ease the pressure of the Forex market. But let's also talk about the impact of the recent price and the increase of petrol. Of course, many are still quite unhappy about that, and that's in addition to an increase in electricity tariff as well. But how has that impacted the cost of transportation and the price of commodities?
Okay, so, we'll start with the petrol price. That was done like last week. We saw that, increased to about 161 Naira per litre. And we see that, so far, transport fares have been mixed in terms of direction. Some have said, it's still flat, because what had happened was after, when there was the restriction of number of passengers per bus, we saw that there was that hike in prices. But since the recent increase in PMS, we have seen like some have remained flat, some prices have remained flat, there have been a marginal increase in transport fares. So it's been really mixed. But going forward is what's important. Going forward, we can expect to see more hike in terms of transport costs, because the thing about transport fares in Nigeria is that it's usually sticky downwards, right? It doesn't go downwards as quick as it goes upwards, right? So when, we saw that, buses were taking more, passengers after, the ease of the lockdown, we didn't see prices come down to what they were before, the COVID-19 pandemic. So it's usually sticky downwards, but when there's things like an increase in PMS price, we tend to see prices react faster to those things, and it usually trends upwards, which eventually bores a hole in the consumer disposable income. And that's why you see a lot of Nigerians right now complaining about the increased pressure on their disposable income. I
can imagine. And then talking about the impact on commodities and the markets, what have we seen since this price increase took effect?
So you see that, from the farms, the commodities that come from the farms to, from the rural areas to the urban areas is usually via trucks, and those trucks are run via diesel, right? So there's that, we don't expect that. But in terms of maybe you're transporting goods within, Lagos area, you tend to use, these buses, that, maybe from Surah to Oyingbo or something, you tend to use buses, and that could now have an impact on, because by the time you're transporting and you're seeing that increased fare, you tend to pass it on to the consumer. So we can expect a marginal increase in some of these commodity prices, yes.
Now, let's talk about rice. Of of course, part of your projections at the FDC is that the price of rice will spike as the supply falls. Of course, it's estimated that floods have washed away about 25% of Nigeria's rice harvest. Already, a bag of rice currently sells at between 27 to about
28,000 for like a 50 kg
bag. So
Yes.
how much of increase are we looking at? Here?
So what happened this year is that the rains were really, there was a diversion, or there was differences in terms of the degree and the extent of rains we saw in Nigeria this year. So over here in the south, we didn't see as much rainfalls as we would, the flooding impact. We didn't get that so much here this year. But over in the north, where this rice is usually grown, there's flooding, and Kebbi State, which is one of the major producing rice producing states in Nigeria, has seen that flood impact wash away about 25% of its projected harvest of about 2.5 million tons. And when you see, and now it washed away about 2 million tons. So all they're expecting from Kebbi, which is the major producer, is about 500,000 tons of rice this year. And so that is going to have, a significant impact. And recall, if you remember Nigeria's journey, we've had such a long and tough journey to self-sufficiency in rice. We've seen, on the policy side, we've done what we can. We've done, the banning of forex access. We've closed the borders to prevent smuggling. Even the rice importation via the ports, we've imposed a heavy levy on, rice importation. But so those are things we can control, right? But in terms of rainfall, in terms of the degree and the extent of rainfall, we can't control that. But what we can control is, our irrigation and our drainage infrastructure. So in a year where you see that, okay, maybe the rainfalls weren't so much, you can't control how much rainfall you get. But you can, if you have irrigation infrastructure in ground, you can fill in the gaps. If you have the drainage facilities on ground, the flooding impact will be minimal. So those are the things we need to start focusing on now. That's what this should teach us, to focus more on the infrastructure side. We've done the policy. Now it's time to also complement it with the infrastructure facilities.
And let's not also forget that, of course, we're getting towards the end of the year, when the end of year festivities will pick up, and that will also impact the price of rice in the coming days. So where are we going? Are we likely to see a double spike? I mean, it's just September and we're here already.
Yes, because right now it's going, like we said, it's going for about 28,000 naira for 50 kg bag, and that's already a one-year high. So, and rice remains a staple, it would forever be a staple. And if, what happened was, the importation, you try to discourage that. So Nigerians now turn to the local production of this commodity, right? So now that the local production is being constrained by rain impact and the flooding impact, now it's going to be a problem, because rice will still remain a staple. So we can expect, that's why we're projecting that rice prices will spike. And like you said, as we approach the festive season, that's a staple for the Christmas across many Nigerian households. So I mean, it's double digits now, and it will remain double digits for a while to come. Yes.
What about economic activities? Now, of course, they're gradually picking up as government continues to ease the lockdown measures. So what's your assessment of the activities so far, the FDC?
So, we see that, international flights have resumed. Lagos is reopening recreational centers, worship centers have opened. We see that, increased economic activities all across the Federation. And, in terms of commodities, I mean, that's good for, commodities, in terms of, farmers being able to go to their farms, there's that, you can do that. There's no more interstate, restrictions. Goods can flow, commodities can flow easily from the farms to the markets over here in the urban centers. So, when there's that, there's no supply bottlenecks. We see that, increased supply usually tends to bring down prices. So we can expect that impact of economic activities reopening on commodity prices.
And that perhaps will bring some relief. Now, what's about the external reserves? They're up to $35.68 billion. What's behind the increase? Is it the increase in the price of crude oil that we saw last week that drove up the reserves?
I mean, that's what we're thinking, and we're projecting it is because, external reserves have, the last update was as I think last week. So we get to see the impact of, this, $41 per barrel on external reserves. But so far, we think that is the increase, the rally we saw in Brent price last week that is really impacting on external reserves. So, I mean, that's some relief to Nigerians, to forex, and that's really.
So what's your outlook for agro-commodities in the coming days?
Okay, so the outlook is, two-faced. So in terms of imported commodities, your flour, we expect to see that the exchange rate pass-through effect will start to manifest in imported commodities. Now, in terms of domestic commodities, it's a bit mixed because, like we said, rice is, affected by the flooding impact. So that supply, there'll be supply shortfalls in that. But in terms of other commodities, we're in the harvest season. We expect to see, more of these commodities in the market, and that should drive down prices. So bear in mind that, maize also, we saw that there was that, relaxation for, some 4 companies to be able to import maize. So we expect that to increase supply of maize, reduce the price of maize. So we see that there's that two-faced outlook for domestic commodities.
Now, let's just touch back a bit on the issue of power. Now, apart from the tariff increase that we saw, are there any other developments that is worthy of note in the power sector?
Right now, not much. We saw that, the recent power update that we saw was, below 4,000 megawatts, So there's that, there hasn't been much development in the power sector apart from the increase in tariff, which consumers are still complaining about. It's still, feeling the impact on their disposable income. But, there was that, we see that the FGN is trying to, douse the tensions that's coming from all these increased prices left, right?
Are they actually doing a good job at that?
I mean, what they're trying to do now is to reassure Nigerians of why this is needed now, because Nigerians are of the opinion that it's the wrong time because, the COVID impact. So, but what the FGN's job now is to reassure us that, these reforms are necessary at a time like this when revenues are constrained. And bear in mind that there's still that trust deficit. Nigerians are, there's the trust deficit between the citizens and the government. What Nigerians really want is let us feel that, the fact that, there's all these taxations left, right? Let's feel the impact on infrastructure. And that's what the government was trying to do in their stakeholder meeting yesterday. We saw that there was that reassurance that, the money saved on subsidies would go into infrastructure, which will be, beneficial. So basically what they're trying to tell Nigerians is it's short-term pains, but, you would feel the long-term gains. That's their job now, to reassure us that these pains we feel now would be beneficial in the long term.
Many hope so. Thank you, Temitope Olugbile, research analyst at the FDC, for your time. We'll be right back in just a moment. Please stay with us. Welcome back. Now, let's recap some of our top stories this morning. And the central bank resumed its bi-weekly sale of foreign exchange to 5,180 licensed bureau de change operators across the country yesterday, with a total of $51.8 million, and that was to meet the demand by legitimate end users. Last week, the CBN injected a total of $50 million to the investors and exporters window, and that move positively lifted the local currency. The resumption of forex sales to the BDCs is part of the CBN's efforts to enhance access to hard currencies following the resumption of international flights over the weekend. We saw the Naira close flat against the dollar on Monday at the I&E window of the foreign currencies market at 386, but weakened by 1.1% to 445 at the parallel segment. All right, time now to review numbers from yesterday's trading session at the Nigerian stock markets. And Edidiong Ewang is ready to do that for us. Good morning, Eddie. So after 6 consecutive sessions of gains, the bears finally showed up at the market yesterday. What happened?
BC, good morning. You're right. The market halted 6 consecutive sessions of gains, and that was due to profit taking on shares of GT Bank, FBN Holdings, and Dangote Sugar. Now, that dragged the market down by 0.09%, although marginally, to 25,582.23 points, while the equity cap was lower at 13.345 trillion naira. Activity level was a bit lower yesterday. Volume declined to 254.97 million units, worth 2.0 billion naira, and all of that was traded in a higher number of deals at 4,699. Now, UBA was the most traded stock by volume, while Zenith Bank was most traded by value. Speaking of those banks, declines from those banks dragged the banking index down. UBA was down, Zenith Bank was down, GT Bank was down, and FBN Holdings was down. So the banking sector shared 0.70%. Consumer goods was down 0.30%, and that was largely due to the declines on Dangote Sugar, Guinness, and Honey Flour. Industrial goods was up 0.03% marginally as Lafarge Wapco posted gains. Insurance was up, while oil and gas was up 0.19%. That was due to the gains on O&O and Eternal Oil. At the unlisted securities market yesterday, that market started the week positive as we saw the NSI jump 1.58% to 725.51 points. Now, the market cap was also high as 532.94 billion naira. We saw 41,394 units worth 11.40 million naira traded in 6 deals. Well, let's talk to Phil Anigbe, a research analyst at Cardinal Stone Securities for more. Good morning, Mr. Anigbe. Thank you for joining us on the program.
Yeah, good morning. Thank you for having me.
Well, we hoped that the banks will, still drive gains in the market this week, but that wasn't so. So should we be expecting declines on that counter, or should we see investors taking advantage of yesterday's losses to position themselves?
Well, you expect a bit of mixed sessions today. Like you rightly said, the banking sector actually dragged the index down yesterday on the back of some very positive gains last week. So what we've seen is a bit of profit taking. We expect that in a few names, especially given that the sector rallied about 276 basis points last week. But away from the banking sectors, I think oil and gas sector also performed very well last week, extended gains into yesterday. So we will not be surprised to see some profit taking on that front also, as well as consumers. On the whole, we expect markets to continue to move in this direction, a bit of a speculative trade here and there. And of course, with time, we expect the resumption of FX sales to FPIs to begin to have some impact on the market as well. So expect marginal movement in the market today.
Well, what are the opening calls in the market like at this time?
Well, we are seeing a cautious trade. Like I said, a number of people are still watching overall direction. Like I noted, the overall theme has been around fast reactions to interim dividend declarations, and a bit of a few others taking profit. But then a lot of eyes are still on potential reactions to CBN's resumption of FX sales to foreign investors. We've not seen a lot of reactions from them. So there's still a bit of wait and watch going on in the market at the moment. So wait to see how that pans out as events continue.
Well, I know the resumption of FX sales is good news for the markets, but is there any other news that the market is expecting this week?
Well, for this week, apart from earnings reactions, I think there is a few and far between variables that are likely to drive the market, except you are looking beyond just the near term to maybe sometime in the coming months, maybe a weighting of frontier market index expected in November can provide some sort of catalyst for the market. But then at the very near term, we see only very few catalysts to market movements besides earnings and maybe interim dividend declaration.
All right, Mr. Anigbe, thank you for your input on the program. Enjoy the rest of your day. Phil Anigbe is a research analyst at Cardinal Stone Securities. We'll have to leave you there for now. Over to you, BC.
All right, Eddie, we'll hope that the market will change direction today. We'll come back to you, Eddie, in just a moment. Plus, we'll see what's happening at the London markets. Please stay with us. Let's head to the UK, where Juliana Olayinka is standing by to discuss the major headlines making the rounds this morning. Good morning, Juliana. Let's begin our conversation with this interesting one from the government saying it may have paid out up to £3.5 billion in wrong or fraudulent claims for the furlough scheme. Thus, these payments may have been claimed fraudulently or paid out in error. How did that happen?
Oh, well, how it happened is that this was a pretty fastly put together scheme with lots of money being given. And I think think tank policy makers, and including the government themselves, did suggest and did say that there was a likelihood for fraud, particularly with the bounce back coronavirus scheme, where you could claim up to £50,000 and have it in your account within 48 hours. But this particular story pertains to the furlough scheme, or furlough fraud as it's been being dubbed on British Twitter at the moment. It is trending. Senior officials from Her Majesty's Territory and Her Majesty's Revenue and Customs, which is also known as HMRC, were asked to appear in front of MPs yesterday to discuss the growing prevalence of tax fraud in this country, not just due to furlough, but due to last year's tax as well. Billions of pounds were lost. There are actually some really significant cases which the government did publish on the British Gov website. And what's happened is since March, since the government were paying 80% of people's wages up to £2,500 for over 9 million people, they have received about 8,000 calls to their fraudulent tax line. And there are also 27,000 pretty high risk cases that they're dealing with. And now the HMRC, they were pretty quick to say that they understand that, of course, this is a completely new system. This time last year, nobody had even heard of the word furlough. Well, most of the people I knew. So they do understand that a lot of employers maybe have filled in forms incorrectly or claimed for individuals who they shouldn't have claimed for. But nonetheless, if you have been overpaid, then I think the government is sending out a clear warning that they will track you down and they will be reclaiming some of the money. As you said, this is between 5 to 10%. Some would say that's a conservative estimate. Some are putting it more to about 20%, but it has cost the government over £35 billion. They aren't extending the furlough scheme, as I've been asked countless times, but they're obviously really keen to get this money back.
Now, fashion retailer Primark says city centres are not remotely dead, even though sales at its 4 largest stores in central London, Birmingham and Manchester have slumped to half last year's level since they reopened. What's behind this optimism from Primark?
Well, what's behind this optimism is that they have been receiving more customers than they expected. And I think we first touched on this story yesterday when I mentioned it. Yesterday, IAG, International Airlines, not International Airlines Group, the British Food Associates, who are the umbrella company of Primark, they updated their yearly earnings and they predict that by the end of the year, Primark will have sales of up to £2 billion. This is still 12% lower than this period last year, but it's still much more than they anticipated. They also said that at the till point, there are much more goods in people's baskets. People are really enjoying the fact that Primark are offering them clothes that are good for their money. I don't want to say cheap. Some would say cheap, but they're definitely, putting up the quality and they're still getting the customers in. Yes, they did also announce yesterday that in their 4 biggest stores, they are seeing a footfall of more than 5%. But it's still a great news, especially if you consider that Primark are not online. So when they had to shut down, they shut down completely, unlike all of their other competitors that were still able to send goods to people's doors. They weren't able to do so. Also as well, we have been seeing, which is why inflation in this country is still at record lows, that they don't have any special discounts. So where you can get 50% off in many goods, where they weren't able to shift those products in the summer, Primark aren't doing that. So lo and behold, this is seen as a great story, which is why yesterday when they announced this announcement, their shares were up 6%.
But on the flip side now, lovers of pizza may not be happy about this next one. But Pizza Express is to close 73 restaurants, putting 1,100 jobs at risk after creditors approved a rescue restructure. Where does this leave Pizza Express, its staff and its customers?
Well, yeah, this is another story we discussed yesterday, actually, with Temple. Pizza Express, really popular casual dining chain. They've been going around for several years now. And even before COVID, they had a massive problem because the casual dining sector in UK and particularly in London had become really saturated and they just were not seeing the amount of people coming into their restaurants as it was very competitive. So they did have trouble before COVID, but of course, the shutdown of COVID made things worse. And rather than going bust, they went down the route that similar dining outlets have gone down, such as Cafe Rouge, Prezzo and Carluccio's. They entered a company voluntary arrangement, or a CVA. So they were looking at ways that they could save money, cut costs. With the CVA that was agreed and announced yesterday, they were able to reduce their debt pile, I believe, from about 733 million to about 333 million. They have 10,000 staff across Britain and about 450 restaurants. As part of this CVA, they have decided to shut over 70 stores. Some of these stores are in the UK, and they had to let go of 1,100 staff. Now, one of their senior execs in Ireland, who oversees Britain and Ireland, said, you know, that part of one of the reasons why they went into the CVA is so they could save the business. And in doing so, they've saved 9,000 jobs. But unfortunately, 1,100 had to go. And I'm sure as the weeks and weeks go on, and as we come to the end of the furlough scheme, which is due to end in 8 weeks, we're likely to see more of these redundancies.
All right, Juliana, thank you. We'll see you again in the afternoon.
Thank you.
And it's back to Eddie Young for a review of the debt and currencies market. Over to you, Eddie.
Thank you, B. So the bond market was bullish yesterday as average yield contracted by about 10 basis points. Now, across the curve, yield contracted at the short, mid and long end. We had 28 deals worth 15.70 billion naira. The Nigerian Treasury bills market, on the other hand, was bearish as yields expanded by about 2 basis points. We had yields expand at the short end. The mid end yields contracted while the long end was flat. We had 18 deals worth 2.11 billion naira. The OMO market, on the other hand, was bullish as yields contracted at that segment. We had 31 deals worth 131.45 billion naira. But joining me now to talk more about the fixed income market is Ramat Baba, the chief dealer at FBN Quest Merchants Bank. Good morning, Ramat. Thank you for joining us on the program.
Good morning.
Now, do you have any idea what drove the bullish sentiment in the bond market yesterday?
In general, we've had maturities in the last couple of weeks, even though, of course, there's been by CRR by the CBN. Last week, we had 301 billion maturities. In 2 days' time, we're going to have about 250 billion maturing in the system. So the system remains very liquid, currently at about 737 billion. So, of course, pockets of demand will come into the market unless there's a major debit coming in to see that liquidity.
So do you think that those sentiments will continue today?
Yes, I think the sentiment will continue. I think the emotion and demand is increasing. At the last auction, demand was kind of low, but last week because
I think we've lost Ramat there, but BC would hope for a profitable trading day today, and hopefully those bullish sentiments will continue at the bond market.
Let's stay positive, Eddie Young. Thank you. And that's where we wrap up today's program. Thank you for watching. I am BC Adebayo.